In today's Money Watch, for days now, we've been expecting some big news from the Federal Reserve, and now it has finally happened. Yesterday, the Fed announced a half-point interest rate cut. That's the first since March of 2020, so this is big. CBS News business analyst Jill Schlesinger is here to tell us what this means in normal people terms, you could say. Good morning to you, Jill. We've been hearing about this for a while. Half a point, people say, oh, that doesn't sound like very much, but it's still bigger than what many thought.
Yeah, we were looking at maybe a quarter of a percentage point. We got a half of a percentage point. And what's interesting about this is it's a recognition by the Federal Reserve that after fighting inflation for the last few years, it now needs to turn its attention to the rest of the economy. Fed's got two main jobs: make sure the economy is strong enough to create enough jobs for anyone who wants one, and also control prices. With inflation coming down, the Fed now says, okay, we got to concentrate on the economy, dropping rates. They're likely to do another half of a percentage point in total by the end of the year, and then get to about a 3% federal funds rate over the course of the next 2 years. But it will happen gradually. It's not going to happen all at once.
But what does it mean, though? How are we going to see the difference? If you're walking around the world.
The way you're going to see it is you'll see interest rates overall start to come down. So it means that when you're borrowing money, maybe to buy a new car, maybe to finance that credit card bill that you have, you'll start to see interest rates slowly go down. So if you're paying down that credit card balance, you're going to get a chance to pay it down at a lower interest rate. If you're going to buy a new or used car, those interest rates should come down. If you're going to get a new mortgage or refinance, those rates are not directly controlled by the Federal Reserve, but they've already started to come down. So if you're a borrower, rates come down. If you're a saver, rates come down. Not such good news.
But, Jill, part of the reason people have big credit card bills is because prices are still high. I was just in Georgia shooting a story in Peach in Forsyth County, and people complain about prices constantly. They are still high, right? That's true.
Absolutely. This is a huge point of confusion, and I get it. You say, well, wait a minute. The inflation rate's coming down. That's what Fed Chair Powell said, but prices are still high. That's because the rate of increase of prices is coming down, but prices overall, they're still high. Remember, we always have inflation in a growing economy. Usually we have inflation of about 2%, but we saw inflation spike up to 7%. That big spike pushed all prices up. So even though they're not going up by that much, they're still a lot higher than they were 5 years ago, 20% higher or so.
That's
so what
big.
needs to happen so people can say, okay, prices are coming down? We know gas is coming down.
Yeah.
What needs to happen?
What needs to happen is our wages start to go up faster than the inflation rate. And over time, if your wages are going up and the inflation rate is going up by here and your inflation rate's here, you'll feel better at the end of the day. It will take some time, and I bet about another few years before we put this period behind us.
All right, Jill Schlesinger with that news that you can use. Love it.